Everyone knows that Bitcoin had a major crash last May, but since then, price has been effectively ranging between 30,000 and 42,000. Well, that range now on lower time frames is broken and Bitcoin has broken down, but will it close back in the range on the daily? That's what we'll be watching. I'm going to review the Bitcoin and Ethereum charts, as well as all the news driving markets today, right here from the beach. Let's go. What's up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel. Go ahead and hit that like button right down below. As I mentioned, I am on vacation right now, but still committed to delivering content and analyzing the markets for all of you. Now, we're going to take a very quick look at the Bitcoin chart because there's a lot to see right now, a lot to parse in this market. First, let's take a look here at the weekly chart. You can see that it seems, after last week holding the 50 MA as support on the weekly, a line that a lot of people have been watching, we haven't been trading below it since May of 2020. Well, now we have a potential breakdown, but notably the week is not closed. This could close back up above and be a fake out, but for now it does not look great, but it's only Tuesday. Now, we know that the weekly chart held 34,000, right around this 50% retracement level of the entire move up from 3,800 to 65,000 for 8 straight weeks, right? We had this support kind of around here with all these wicks down below and closes above. Well, last week we saw it break down, meaning that all of that demand was finally sapped between around 30,000 and 34,000. We had seen buyers stepping in every single time it went down there. Well, this time it was not meant to be, and now we have a lot less friction for price to go down. Naturally, we'll be looking at the 61.8% retracement level. That's 27,175, down to around 65%. That's called the golden pocket for those who trade Fibonacci's. That's probably in the 25 to 27,000 region. I do not have that exact level drawn on the chart. 65% is not a Fibonacci level, but that's the natural level. Below that, of course, people will be looking around 20,000, which were the highs from 2017 of the previous market, which were actually never retested as support on the way up. So for now, if you think price is going to drop further, I'd start looking at 27,000. Now, on the daily chart, you can see here that this 30,066 represents those range lows I was talking about. We'll zoom into the 4-hour and see that more clearly. Now, a lot of analysts view this 28,600 as the range lows. Crypto Burb said that on my live stream on Friday. Big Cheds was on there as well. He thought, as I did, that 30,066 was the range lows. But interestingly, as you can see here on the daily, we have not closed below it yet. So if this closes back above, we could have another fake out just like this, and then a move back to the range high. So nothing is confirmed yet, in my opinion. We will see what happens on the daily close. We do still have this descending blue channel, which is perfectly fine and eventually should break to the upside. But that doesn't mean we can't come down and tap much lower levels as support in that channel. And speaking of descending channels, the ones we were watching on the 4-hour failed, right? Technical analysis is not a science. If it was, we would all be extremely rich and everything would go the way we planned. This was a confirmed channel, up, down, but just like poker, you can push in with pocket aces and lose your hand. Well, if you pushed in on this channel, you lost. You can see that the range lows here are broken and we do have 4-hour candles closing below. At the moment, those 4-hour candles are showing wicks down and a bit of buying, but it'll be interesting. Technically, shorters will be looking to short the lows of this range around 30,000, a retest up as resistance, and then a move down to the levels I just described on the weekly chart. It would be interesting for bulls if we did see that daily close back in, showing the 4-hour recapture the range lows. That would be a really, really bullish signal, actually, even among all this bearishness. What's of note is there's just no volume on any of this. You look for volume to confirm price action, and there's just been no volume to confirm any price action. You would have expected these range lows to drop on a huge spike of volume, but they didn't. Just sort of shows that price is drifting down as sellers continue to push slightly and buyers don't step in. It will be very interesting to see if the range lows can be recaptured or if on a retest as resistance, they hold in that manner. Now, taking a look at Ethereum, really interesting here. Ethereum actually has not lost the range lows. On the Ethereum Bitcoin pair, actually, it's at support with some bullish divergence with oversold RSI. That's kind of an interesting sign for altcoins that the Ethereum is not dumping here, is actually gaining a bit of speed against Bitcoin at these levels. Now, as you can see, what's interesting, Ethereum is ranging after a move up, not a move down. Bitcoin was ranging after a move down, which is more bearish than bullish. This is more bullish than bearish. We've seen lots of charts range like this before moving up. We are in the bottom half of the range, too early to get particularly excited, but bullish divergence at support is really interesting. And now you zoom into the Ethereum USD pair, looks more like Bitcoin, right? Because it's after a drop, we have a range. But Bitcoin, while trading below the range, Ethereum's not. Ethereum's actually here with potential bullish divergence. Yes, this is over a longer period than we like, but also oversold and bouncing nicely off support. So it's going to be really interesting to see what Ethereum does. We know that if Bitcoin really does dump, Ethereum will likely follow. But for now, if Bitcoin can hold this level, Ethereum actually looks like it may hold the range lows, which could be a sign for the entire market. Now, let's take a very quick look at the news that is driving the markets as well. Rothschild Investment Corp more than tripled Bitcoin exposure in Q2. This is really astounding. It shows you institutions are buying. They love this dip. They are not afraid of it in that regard. The institutional investment manager also increased its holdings in the Grayscale Ethereum Trust by about 5%. What I find really notable here is that they own more of the Ethereum Trust than the Bitcoin Trust, meaning there are institutions out there that are more bullish on Ethereum than they are on Bitcoin, but they are buying it up, Rothschild Investment. Now, most institutional investors expect to buy digital assets in future. There's a report by Fidelity, really interesting. They said that about 70% of those polled said that they would eventually own some sort of digital assets. What's maybe even more notable here, over half of those surveyed by financial industry analytics firm Coalition Greenwich said they had digital asset investments already. Over 50% of those surveyed already have some sort of exposure, and more than 70% say that they eventually will. And speaking of other institutions, JPMorgan is on a blockchain hiring spree. I talked about this in my live stream yesterday. It's really funny. Jamie Dimon, their CEO, says that Bitcoin is dangerous and that he'll fire any employee who touches it, while in the meantime, allowing their wealthy clients to trade Bitcoin, and now on a hiring spree, knowing that the Bitcoin is the future. Watch what they do, not what they say. In the next story, Republicans want digital yuan restricted at Beijing Olympics. Yeah, that makes a lot of sense. Everybody's going to China and they're afraid that the United States athletes will use the digital yuan, download a wallet, and then will be tracked for the rest of their lives, because we all know that central bank digital currencies remove privacy, especially if they're issued by China. Now, this is notable because they seem to be saying this and warning of the threats of a central bank digital currency in China, but not really talking about how a digital dollar would have the exact same threats. A little cognitive dissonance there, but interesting that they are pointing this out, because it will make the argument for those of us who point that out when the digital dollar comes along. And finally, NFT Marketplace OpenSea valued at $1.5 billion in $100 million funding round led by A16Z. That's Andreessen Horowitz. We have another unicorn valuation in the crypto space. OpenSea, the NFT platform, $1.5 billion. Clearly, there's still a lot of money flowing into crypto. Now is not the time to get overly bearish in the long term. Guys, that's everything I have for you today. We'll be live streaming tomorrow, also from the beach, 2 p.m. Eastern Standard Time, doing chart requests for my paid subscribers. Please check out Femex. They are giving $1,200 bonus to anyone who deposits over 1 Bitcoin. That's down in the description, as well as my newsletter. Until tomorrow, peace.